SpaceX is going public, finally. And the valuation is so crazy that even with my incredible ADHD, I commonly cannot focus more than 5 minutes on anything. It was 5 hours and they passed like I was watching a special from Ricky Gervais. It was amazing. And I'm gonna share with you the 4 most important topics that are making of this one of the craziest IPO on earth, other than it's the largest by a large margin. So first of all, how much it is? 1.5 trillion valuation. It's insane. It's so insane that it doesn't make sense. So I say, okay, let's go to the SEC filing. The SEC filing is basically the report that says and justifies how they're going to invest the money, how much are raising, how they are raising, what type of shares they are, right? It's mostly rockets. In this one is just mostly rockets. I'm showing you the screen, I'm not even lying. I know that Elon Musk loves rockets. Now, put it into the filing, I'm not sure how it's supporting. You really need something that crazy that goes to the moon in order to elevate that valuation because it makes no sense. So how much money is actually making SpaceX? It's kind of funny. If you look at the revenue, meaning just the money they bring in 2025, that was 18.7 billion. If you look at the actual money that they're making, they had around 5 billion loss in 2025, and just the first quarter, 4 billion loss. So already not good for SpaceX, but don't worry because Elon Musk got us. When you need to justify a number in a valuation, you can do it in so many ways. In this case, all of them fail when you put it to the test. Let's see, for example, that we compare SpaceX with similar IPOs. You commonly need comparables. You compare it in this case with Alibaba or Facebook, other than the astronomical number that is 1.575 trillion. I cannot emphasize that enough. They are making almost no money. There is nothing to justify the difference in valuation. If you do it in PE ratio, so price over earnings, you have negative numbers because they are losing money. I have a definition here that is very funny. So EBITDA is basically before accounting for depreciation, amortization, financing cost, taxes, stock compensation, and some other adjustments, they still have a 275x multiplier on the number that they are going public. It just made no sense. If you compare it with other technological companies that they might not grow, of course, that far, it's still 20 or 30x, but where the money is coming from? Don't worry, because Elon Musk has an answer. First of all, the SEC filing says that they are going to bring money in 3 aspects. First is Starlink, which is actually making good money. Not good enough to 1.575 trillion valuation, but good money. Then they say that all the space equipment that they are bringing, and they are creating, able to catapult rockets into the sky and let them come in from it almost unharmed. Everything actually makes no money whatsoever, but is what they allow them to make money on everything else. And the other is all their AI infrastructure that they are bringing in now, and allegedly is going to make a lot of money in the future. The problem is that AI is losing money, the rockets are losing money, and the whole ecosystem of connectivity that they are doing with the Starlink is not bringing nearly enough to compensate the losses on everything else. It just makes no sense. Now, maybe I am an idiot, but the problem is that you have so many banks already pushing for it because this is, again, the largest IPO in the history of humankind. So all the banks are already siding with basically all the valuations because they need it, because they are a partner on it. So what happens when you bring Morningstar, for example, as a sort of independent partner on getting a good valuation on it? Well, they get to a $63 valuation, or about 53% discount over the price that they are selling, or a 53% discount over the price that they are pushing for mainly retailers. So do with that information whatever you please. The second part, still on the valuation, is the amazing deals that they just brought to the table. And they are amazing deals, but they are a major conflict of interest. So it is Google and Anthropic that they push for a combined partnership of around $26 billion a year in just revenue. First of all, it's revenue, it's not net profit. We don't know exactly, no one knows exactly other than Elon Musk and Google and Anthropic, how much of that is going to be pure profit for the company. But I assure you, it's not going to be $26 billion. That's the first part. The second is conflict of interest. In 2015, Google, along a major partner, Fidelity, bought a 10% stake on SpaceX. Now, Google is also a major partner on Anthropic, a very large investor, more than $30 billion already put into the deal. So it's a very amazing coincidence that they wait just shy of 1 month to publish one of the biggest deals on AI on the entire history of mankind. It's true that all the largest deals are becoming now a reality, but just before the IPO, with so many conflict of interest, again, you take the information as you please, but it is very strange that they push for it. Now, if we go to the details of that contract, It is very funny, but it only stipulates that they have to stick with the deal 3 months. Both of the deals are exactly the same in terms of how much time they have to wait until they can pull out of the deal. 3 months is completely mandatory to be in. After 90 days, they can pull out the deal with 90 days of notice. That's it. So it's not 3 years advance now. Is if everything sounds good to us for all this period, we remain. But as anything goes wrong or we have bigger or better opportunities, we can pull out the deal. So those $26 billion, they are not even a guarantee. And I have the suspicions that eventually they will pull out. The third part in this, it's amazing, is pushing for retail. So why am I saying that this IPO is especially suspicious in the way that they are pushing for public investors? Commonly, when you want to go into a large IPO, you do a compendium of banks. That's commonly called an association or a syndicate. In this case, almost every major bank is into the question, as there is a large amount of money. Now that makes sense. That is not the suspicion thing here. When you need so much money, 75 billion, you need a lot of people, and large investors are already in SpaceX. So you need a smaller and smaller investors. That part is fine. What is not is that they are advertising this as if this IPO was taking the whole company public, and that is not the case. Only they are issuing shares for about 4.5% of the company, which means that not all the liquidity of the company, 1.570 trillion, is going to be out there able to trade. There's a very small amount. That made that even for an IPO as large as this one, the report says, Morningstar, for example, or Reuters, that there is 4 times more demand than there is offer, which is unheard of for an IPO, especially this large. It just makes no sense. They allocated 30% of this IPO to go specifically to retailers. Banks are lowering the amount of money that it is required for people to put in order to participate on this. Robinhood and platforms like that are pushing for people to go so much that even my friends on gambling platforms had been advertised on how to invest on the IPO of SpaceX, and even they say, this is my limit. I'm a gambler, but going into this IPO is taking it so much far than it should be. What I think is happening is that large investors need a way to justify that all their assets that were completely frozen under a private company, finally, that valuation is being justified in the market, which allows them to take that money, revaluate those shares rather, revaluate how much they valued, and they take loans against it, or eventually take it public in the sense of selling the shares to retailers. And if this is going the way it's going, the track is going to be, this is going to the moon. So they can sell it, no problem whatsoever. The fourth part is about conflict of interest. When you have a company, you can create B shares and A shares, and you decide which one holds the actual power. So in this case, B shares have 10 times the vote than A shares, but the ones that are being distributed, obviously, is A shares. Now, what this means is Elon Musk is going to retain around 85% of the voting power, even though he's allegedly giving away another 5% chunk of the company. This in itself is not something negative, but it's a funny way that you are advertising from the will of the world and the voice of the people, and still you want to retain so much power over your own company. And now we get to the last point, and the part that actually worries me the most. ETFs and the inclusion of this IPO, SpaceX, into the ETFs. Why I say that? Commonly the ETFs are protected against this kind of very fast operation with very high volatility, where a company can go live and immediately crash down, or who knows, go to the moon. But whatever that happens, the main problem here is that ETFs are mandatorily obligated to replicate the index. So in the end, it relies on a third party, the index, to make the proper work, to know that this company is not going to crash immediately. In other words, that the valuation that they say they have, it is actually back. And in the market, that only happens with enough time. Given a year, it might be that the company is actually trading at what it should be worth. And that is the assumption that we all have and we have been practicing over the years. The problem is that now, 3 of the major indices, they are changing that policy. The NASDAQ announced that fast entry for very large market capitalizing companies. And that is a problem because SpaceX, with $1.75 trillion valuation, it is going into that fast entry category. It's very suspicious, but who knows, maybe I'm just crazy, that they're just pushing for this, specifically for this company. Before, you need about a year after you go public in order to be included in the index. But now they are pushing for 7 days to be considered and around 15 days to be completely included. The Russell has also been pushing for fast entry, and so does the MSCI. The point being that they are pushing extremely close to the date that SpaceX is going public. And there are so many conflicts of interest across so many banks and so many regulators that I wouldn't be surprised if this is specifically done and designed for enterprises like SpaceX, but not only for SpaceX. So this information I'm giving you, do with it whatever you please and do your own research. But just know that there are so many conflicts of interest from the very beginning to the very end. And I'm not saying that the SpaceX cannot go to the moon, because who the fuck knows? I'm only saying that there are so many red flags and conflict of interest into the middle. So unless you are a very good professional, experienced investor, you should not get into this. Probably, most likely. I've been working in quantitative finance for about 5 years. Before that, I was working in artificial intelligence applying to medicine, and I am back again into artificial intelligence applying to medicine, specifically with white box expert system aided by elements and the whole quantitative charade. And here mostly I will talk about biohacking, finance, LMMs. Actually, I have ADHD and it's whatever it looks shiny the next day, so that's what we're gonna do. I'm gonna look for something that is surprisingly nice to me for the next 2 hours, go deep into it, apply the most amount of brain I can, and then show it to you so that this amazing amount of knowledge doesn't go waste. Look up, puppy. If you like it, subscribe and thumbs up. And if you don't, you can do like Caesar in the Colosseum and gives me a thumbs down. It's actually Caesar didn't build the Colosseum. It wasn't built yet. Anything else? And they're in the comments. Thank you so much.